All right, welcome everybody. It's my pleasure to be here today, or to be virtually here today, with Chris Dixon and Packy McCormick. Um, Chris is a general partner at Andreessen Horowitz, and Packy is a prolific writer and investor at Not Boring and Not Boring Ventures. Um, and it's really a pleasure to be here because both Chris and Packy I find to be both really deep thinkers and really articulate in the expression of their thinking. And so I'm happy to introduce them. Please, everyone, give them a round of applause. So I want to start with kind of just a little history, starting with Chris. Chris, when and how did you get into Web3?
Yeah, so thanks. Well, first of all, thanks for having me, Sep. We're big fans of Celo and have been involved, as you know, Sep, from the very beginning. So thanks for having us. I'm excited to be here. I got involved. I guess first started getting interested in Bitcoin and things and kind of crypto, and probably about 10 years ago. And then I joined Andreessen Horowitz in 2013 and decided I was going to really kind of do a deep dive. Ended up investing that year in Coinbase, which I was on the board of for a long time, for 7 years. At the time there was sort of just kind of Bitcoin, and I think what attracted me to it though was kind of the Web3 vision, which was, I had just, for those who remember who are in tech, had been this thing where Twitter, a lot of startups and developers had built applications on Twitter. And people kind of viewed Twitter as sort of a protocol in the way we viewed HTTP and SMTP and kind of the 90s protocols. And then I think it was around 2011 or 12, I think 11 maybe, they changed their policies and basically just sort of in one fell swoop kind of wiped out that whole segment of the market. And so what was sort of top of mind to me was, it was the first time I really realized that Web2, that these kind of big centralized companies had really changed the architecture of the internet and had made it, I didn't sort of foresee the whole kind of the extent of it, which I think has gotten much more concentrated and these companies become much more powerful. But then I was intrigued by Bitcoin initially as a protocol, as a sort of independent protocol. And the thought at the time, like when I invested in Coinbase, was could you extend Bitcoin to do other things, like, for example, to build social networks? Now, of course, fast forward, what ended up happening is Bitcoin kind of stayed on the kind of financial trajectory, but those ideas were kind of picked up by Ethereum and then by, blockchains like Celo and sort of all this kind of modern movement that we see. And I think of the kind of core idea as, can we, like, without going too far down the rabbit hole, Web 1 had its, sort of, which I define as 1990 to 2005 or so, was the web kind of governed by open protocols like HTTP and SMTP. And that had all sorts of benefits, including the fact that small businesses, creative people, entrepreneurs could build things and own those things and really control those things, right? Web 2 came along, and this was sort of Facebook and Google, sort of 2005 to 2020 is kind of how I think about it. And these were great services. You had, social networks and, WhatsApp and messengers and search, and billions of people use these services for free. That's great. The downside of it is there's about 5 companies now that kind of control the internet, and they can do all sorts of things, including they basically take all the money that's made on the internet, the vast majority of it, and they have just sort of outsized influence and power. And is that a good thing? I don't think that's a good thing. And so the promise of Web3 is to combine, I think of it as the best of both worlds. We can hopefully get kind of the advanced, sophisticated services that we've all come to enjoy from Web2, while also kind of going back to the original kind of decentralized principles of the internet. And so maybe I'll stop there because I could go on for much longer and let some other people speak.
And I'd actually really love to dive in on that a little later. I first want to ask Packy, how did you get into Web3?
Sure. So I think I came in, like some people, as a criminal. So I was at Bank of America, and they monitored all of our trading. I was leaving; it was a pain because you couldn't tell anything. And then I read, actually, while Chris was investing, I read Fred Wilson's blog post on Coinbase and the investment that they made back in, I guess this was 2013, and so decided to buy some Bitcoin. mostly because one, the blog post seemed interesting, but then two, because Bank of America had no idea that Coinbase existed, so there were no kind of trading restrictions on that. I then went to Oktoberfest, spent too much money, sold the 38 Bitcoin that I bought for like $150 each, which is why I'm not going back to Europe ever again, and why I'm not there right now, because that was a $2 million trip to Oktoberfest. I actually kind of stayed out for a few years and really kind of came back in late 2020. Chris's writing, I think, had a big impact on that. The first blog post I wrote was really about this idea of what happens to the value chain when most of the value goes to both the people who are creating and to the people who are using the networks. And I had a graph that Chris included in a blog post of how platforms can go from attract, where you're just kind of doing everything, like he said, Twitter was trying to attract developers in the beginning, to once you have a critical mass and people are locked in, then you extract. And like there are all these concepts that I've been thinking about and all these business models that I've been thinking about that change and get enhanced when you throw kind of the Web3 tool set at them. And so since then, I've gone kind of deep down the rabbit hole and gotten obsessed, just because I think, it's, I guess, cliche to say that we're so early, but even just in terms of kind of the things that are able to be done, probably the people in the room right now are building the generation of things that I think are going to be most exciting to the outside world. So I think I'm very early in my Web3 exploration.
And Packy, you had a really great blog post around, you used Braintrust as an example of the potentialities of Web3. And I'd love you to kind of give a little summary of the specifics, but the general message from there.
Sure. So Braintrust is a user-owned talent network where the users at this point, they've decentralized. So it behaves an awful lot like a talent network with higher value contracts. So this might be engineers and designers getting hired by Nike and NASA and Porsche and all these $70,000, I think, average contract. A normal hiring marketplace, I think what would happen, kind of like Twitter, kind of like Uber, is that they would attract all of these people on both sides of the marketplace. They'd build in really high switching costs. There'd be moats around the business. And then at some point, they would move from attract to extract. The really interesting thing here, and they would do that by raising take rates and saying, hey, instead of the 10% that we take today, now we're going to take 20%. If you want to go to another platform, great, but we have all the talent and we have all the hiring companies, so good luck. Now, I think the really interesting thing is, because the users of Braintrust own the network and govern the network, they're the ones who get to then vote on, do we want to raise take rates? And raising take rates, the percentage that they take isn't necessarily a bad thing. At some point, maybe the network needs to raise take rates to survive or to attract more companies or something else. But because the people who are the users of the network, whose livelihoods depend on the network, are also the people making those decisions and voting, they're not going to be overly extractive on themselves, because it's actually more valuable to them to have their income not have a 20% hit instead of a 10% hit than it is for the value of their tokens or equity in the Web2 world to increase. And so it just really aligns incentives around the people who are using the network and creating value in the network, and the people who are benefiting from the upside of the network, and the people who get to make decisions about the network.
Yeah, super cool. And Chris, I'll follow that with basically kind of what we've been doing in the last couple of questions is comparing Web3 to Web2. I'm interested in comparing now Web3 to Web0, like the kind of bootstrapping of SMTP versus the bootstrapping of protocols today. And SMTP, I mean, took years to bootstrap. What are some of the differences that you're seeing today in terms of bootstrapping infrastructure, bootstrapping core infrastructure?
Yeah, I mean, I think it was a wonderful accident of history that, that the internet was originally came out of academia and government, and we, and those institutions had built these open protocols, which they nurtured for many years, like SMTP and HTTP. You notice though that there's really no, maybe RSS sort of, but really no kind of open protocols have become dominant in the last 30 years since then. It's just not. And look, I think a lot of it, if you look at it, a lot of it's economics. Like OpenSSL had this famous bug a couple of years ago, right? Which is that's the core team that makes SSL across the internet, sort of the core encryption of the internet. it came out, they had this bug. It came out they had a half a person working on this critical infrastructure because they had no funding. Now, in that case, people, I think some people stepped up and funded that organization. But it's just generally the problem in kind of open protocols. If you don't have this sort of incubation from government academia as the Web 0 era had, it's very hard to fund these things, right? And how do you compete against, Google has whatever, 130,000 people, I don't know what it is, but some giant number as do all these companies. I think that's why RSS, there was a point in 2007 or so when RSS and Twitter were neck and neck. You go look at the charts, and then Twitter pulled ahead, and I think a lot of it's funding. So one of the big differences with Web3, right, is you now have protocols can get funding. They can have, if you look at ENS, I don't know what it currently is, but they did an airdrop, and that half of the tokens or whatever it was went to the treasury, and at some point at least it was worth billions of dollars. I don't know what it's currently at, but the point just being, this is important, open community controlled infrastructure that now has funding, right? And that's a really big deal, and then that means that these protocols can compete on a level playing field. There's also technical advantages. So Web 0 protocols were stateless, as they say, like meaning you can't remember anything. HTTP has no memory, right? SMTP has no memory. You can store things at the edges, the clients can store things, but the protocol still has the memory, right? With modern blockchains like Celo, you can store things, and you can run compute, and you can store things. And so architecturally, for the first time, we have kind of community-owned compute and storage. Blockchains, I like to say they're computers in the sky that are owned by no one and accessible to anyone, right? It's a brand new kind of architecture. So I think there's an economic dimension, and I think there's a technical dimension as to why these protocols are kind of dramatically more powerful than previous incarnations.
Yeah, super interesting. And I'll dive in with another question on the economic front, and then I'll jump in with kind of a little more color on the technical front for the audience. But on the economic front, I mean, if you take a look at like SMTP or HTTP, thank goodness they're open, because they are even bigger monopolies than, say, Google or Facebook. Like everybody. If SMTP were a company, it would be the biggest company in the world. And one can imagine two ways that things can proceed when you add an economic dimension. One is that like the core infrastructure will actually be more of a monopoly because there's more funding behind maintenance of that monopoly. But another way you can think of it is, a lot of these token economic models are predicated on the growth of the protocol. And so once the protocol stops growing, you can imagine that kind of the incentives will start leveling off, and there will be incentives for new upstarts. And so basically it'll allow for a more vibrant protocol scenario than what we've seen with HTTP and FTP, or HTTP and SMTP. And so which of those two or something else do you see things going? Kind of, this is like a many years in the future question.
To answer that, or Packy? I'm happy to try. So you're saying, will these new protocols sort of re-centralize to monopolistic power?
Will they be even stronger centralized?
Yeah. Well, yeah. I think a very key thing to think about is, so why is Facebook, a monopoly essentially, or Instagram, or at least a monopoly within that category? It's because of network effects, right? Because I go on Twitter, let's say, and I build up a following, and I don't want to leave Twitter now because I've spent years building up a following, right? Whereas with Web 1, if I don't like my email provider, I can leave and I can switch my DNS record, right? And so the key difference to me is in open protocols, the network effect doesn't accrue to a corporation. The network effect accrues to the community, right? The community owns the network effect. Any user can sort of, if there's a centralized provider, they can detach themselves from that provider and move to another one because the network effect exists as a public resource as opposed to a private resource, right? And I think that fundamentally limits the monopolistic power, because network effects are how you become a monopoly on the internet. And it's a network. So the key question to me, and this is getting a little technical, but I think it's a really important thing to understand, is the key question when you talk about monopolistic power on the internet is, where do the network effects accrue? And do they accrue to a public resource like the community, or a private resource, right? And that's one of the key differences between Web 1 and Web 2. And I believe Web 3 is on the good side of that. but it's early, and it could go off the rails, and it's important that people understand this and also get involved. That people with the right intentions get involved, and it's obviously like a group effort, and so we need to make sure that it actually kind of fulfills the ideals.
Yeah, that's an important and nuanced point. It's why SMTP, even though it's a much bigger monopoly than any Web2 monopoly, it's not really scary. The only thing that it prevents is like newer, more interesting protocols to come into place to replace SMTP because the network effects are so strong. And I'm going to give a little bit more color to the technical nuance because I think that's also super interesting. Basically, kind of like Web 1 is, if I were to describe it in one sentence, it would be, or in 2 words, it would be that it's an open network. Of course, like closed networks existed before. They had a network admin and they were useful. And the only difference between the internet and these closed networks that existed before was that the internet had no network admin. But in that small difference was the universe, because basically people started making websites for the internet that they wouldn't make for an intranet because it had, it could be taken down, or somebody else might monetize it, or like the whole network might at some point die, whereas that didn't happen with the internet. And so as a consequence of that, everybody started making stuff for the internet. People started making applications for like browsers for the internet that they wouldn't make for intranets, and so on. Similarly, like Web3, the way that I would describe it in 2 words is as an open database. So closed databases with database admins existed, and they were powerful, and the only real difference is that like the blockchain has no database admin, but in that difference is the universe, because there's now people are building on, and we're seeing the early stages of that, people are building on an open database for the same reasons that they built on an open network. So I want to switch over to, because so many people in the community here are builders, I want to switch over for some advice. Packy, I'd like to direct this question to you. So basically, you do such a great job at narrative and taking complex ideas and distilling them down to both like verbiage, but also a personality that people understand and can relate to. And so I'm curious, as a lot of people here are entrepreneurs crafting their narrative for their companies, do you have any high-level advice for people who are going along the journey?
Yeah, so I think the first big thing that you need to think about is who you're telling that narrative to. So, I could write the newsletter in a couple of different ways. I could write it very much to crypto insiders where everyone understands the language and everyone is already on the same page. Or I could write it to people who are maybe a little bit curious or have started dabbling or have played around with some things and invested and bought some tokens and started joining some communities, but like really want to understand what's going on beneath the surface. And I go for that community. And then once you decide which community you're speaking to, then you can kind of figure out where they might be in the journey. I mean, for me, I feel like I'm learning all of the time. And so part of the secret is just that I'm exposing what I'm learning in real time in a way that doesn't sound too much like an expert. I think companies in Web2, Web3, anywhere can get too insular and caught up in the way that they describe the thing and the things that they know and take for granted that other people know those things. I also think that they can get a little bit too high-minded, maybe even about the mission. And I think the sweet spot is somewhere right in between, where you can connect this really big thing that you want to do with the details of how you're doing it, but in a way that makes people understand why that's both important to them, important to their community, important to the world around them. I mean, I think, within the Celo community, I think the refi movement is a huge example of a place where it's just super ripe for great narrative and storytelling, where all of a sudden you have this toolkit that like maybe people don't care about if you're talking about flipping pictures of monkeys or if you're just getting rich by speculating on a token. But people really care about if you can figure out how to align incentives among large groups of people and make sure that the world doesn't burn in the next couple of decades on our watch. And so I think it's really about understanding kind of, the technical side enough to understand what it allows groups of people to do when it's put in the right hands. And so, explaining it to the group of people that you're going after in a way that is both inspiring, but also kind of realistic.
Yeah, I love that. And also, I mean, when I read your writing, it feels so human, so non-institutional. It feels like I'm sitting down and grabbing a beer with you. And um, have you found kind of, how have you kind of, basically kind of, it feels extremely authentic because and I want to kind of ask, how would you give advice for people to express that same kind of authenticity while describing like difficult things?
I think for me, I'm lucky that I'm in this like Goldilocks zone of intelligence where like there's some people who might just be like way too smart to understand how like a normal person would think about it, and some people who might just be a little bit too dumb to like understand it and explain it. And I'm like not that smart, not that dumb, like kind of just right in the middle. And so like part of it is just that like I'm really figuring it out as I go, and so I'm just kind of translating in real time, assuming that most of the people in the room are smarter than I am. I think the thing to do is like I started out by almost being a caricature of myself. So the first not borings were, let's take a concept like Schumpeter's Gale, creative destruction from economics, and combine it with the Mickey Mouse Club. So what would have happened if Christina Aguilera and Justin Timberlake and all those talented people were still members of the Mickey Mouse Club today? It would be tragic. So in the beginning of COVID, I wrote a piece about how like it's actually maybe a good thing that these companies are shedding a lot of people that maybe they hired when times were too good, and like people are doing useless jobs. And then over time, I don't use Disney and cartoon characters and whatever to describe it, but I've tried to keep that same tone. So I think almost start out being a caricature of something and then keep the essence as you continue to write and explain yourself.
Yeah, awesome. And Chris, before you were an investor, you were an entrepreneur twice. And I'm curious, there are a lot of people here who are already building their companies. There are a lot of people here who are thinking about what to do. And I want to ask about that pre-company phase. Like, how have you in the past decided to do what you were going to do, what you were going to commit your time and life to?
Yeah, we have this. I had this kind of framework. It kind of comes from Peter Thiel, but it's this idea that many startups are what we call earned secrets. So what that means is, let me break it down. Earned means you spent a fair amount of time kind of really studying a problem or working in industry or maybe working in a research lab, whatever it might be. Because many startups do come from kind of years of some kind of experience, and it could just be you're working in the crypto space and you see a lot of problems and things like that. And then why? And then secret why? Because basically, the kind of startup, if you think about startup ideas, if I said I want to build an iPhone with a better battery life, like that's a pretty obviously good idea. And I'm sure Apple's spending billions of dollars working on it, right? And so almost by definition, startups are the things that all of these really well-financed companies are overlooking and think are kind of silly. I have this blog post from years ago. I say the next big thing starts out looking like a toy. And the point just being a lot of really important technologies have started off kind of looking, this really comes from Clay Christensen's disruption theory, but like they start off kind of junky. So like the first telephone could barely go a mile, but then what I think the critics kind of underestimate is the degree to which it's improving. So I just say a couple, so just, this is a long conversation, but I'd say a couple things. Go deep in an interesting area. Start from problems, not solutions. A mistake I made in my second company is I sort of fell in love with machine learning technology as opposed to my first company, which I think had better product market fit, where I started with a problem. In that case, it was phishing and spyware, and I knew this was the problem, and I thought about how to fix it. Start with a problem, go deep in an area, look for the toy insight is look for things that are that can follow exponential growth curves, and you can ride those things. One of the other mistakes I made, is trying to create a trend versus ride a trend. It's startup is a little dinghy boat on an ocean, and so you got to look for where the waves are. Clearly, I think the space that we're all in here, the Web3 space, is a giant wave, and that's going to make a lot of startups more successful. What else? I mean, the most important thing, the single most important thing you can do as an entrepreneur is surround yourself with great people, hire great people, partner with great people, and spend your life kind of looking out for those people and building relationships, for sure. There's a lot of, I could go on, but I'll probably stop there.
Well, I mean, I have two kind of follow-on questions to that question. The first is, and this is probably more interesting than directly useful, because I think people's earned secrets kind of have to be their own. But I'm curious, now that you're an investor and you cannot go build your own earned secrets, what are some earned secrets that you'd like to share with the community?
Specific earned secrets. I'm not in that business anymore. I'm in the business of meeting people that have done that and partnering with them. So I don't know if I had those ideas, I'd probably be. But no, I think one of the actual really important things about investing is that you kind of approach it with some, especially in venture capital, some level of kind of intellectual modesty. And my expectation is that a lot of good ideas won't look good to me at first, and I need to spend time kind of thinking and understanding them. So generally, I'm in the trying to understand earned secrets business now. So
it reminds me, the very first social network I ever saw before Friendster, before MySpace, a graduate student. I was a graduate student at Stanford, and a graduate student named Orkut, who was across the hall from me, was working on this social network called Club Nexus. And I remember I went across the hall and I said, "Orkut, what are you working on these days?" And he said, "Look, you can see who your friends are." And I'm like, "Orkut, you need to get out more." And so it's just a reminder of the level of how often really good ideas look kind of silly at the beginning. And Chris, you also talked about product market fit, and you said your first company had better product market fit than your second. And I remember Mark wrote a blog post once about, I forget, it was called something like "Product market fit is the only thing." And so I'm wondering, how do you know when you don't have product market fit? And how do you know when you do? And how do you act as an entrepreneur before you have product market fit versus how do you act after you have product market fit?
Yeah, I think a mistake people make sometimes is they overhire before they have product market fit. Because generally pre-product market fit, especially if you're a software company, is usually a fairly small team. So like if you look at just all the great software projects in history, like they were 10, 20, something like that, not 200, 500. It obviously varies by what you're building. If you're building a smartphone or something, you can have more. But so that's one. I think, how do you know it? I mean, it's one of those things you probably you know it when it happens. There's a famous, it's kind of dated now, but Jeffrey Moore has this famous book, Inside the Tornado, which is all about sort of like once it hits, you're in the tornado, and like generally like your website's going down, you can't fulfill all the orders. If you're building hardware, fail whale, all this kind of stuff. Mark Andreessen likes to say, yeah, if your website's not going down, it's you don't have product market fit, that kind of thing. So you kind of know it. You're just it's like the airplane is steam's coming out of the front of the car and the thing's rattling and just like everything's breaking, but in a good way, right? So generally that's sort of the you kind of know it when you see it, I think. But if you're not sure, you probably don't fully have it. But it's an iterative process, and you have to kind of, maybe you have product market fit with early adopters, and then at some point you kind of cross over into more mainstream markets. I'll say one last thing. So, Kevin Kelly has this famous blog post, 1,000 True Fans. I think that's another thing, is that it's often better for product market fit to have 1,000 people that love your product than to have 10,000 people that like it. That's another way is it like those 1,000 people are passionate, and then the question is just sort of how do you explain it to more people and spread the word.
Yep. Yeah, I love that. It's so important, and it's so hard to recognize because you tend to be measured by your numbers rather than by like the intensity of the like how your core community, the intensity of your core community, because the numbers tend to be quantitative and the intensity of the core community is qualitative, but that intensity is actually a predictor of what's going to happen in the future. We have about a minute left, so I'd love to ask each of you, starting with Packy, what are some of the things that you're seeing going forward that you're most excited about in Web3?
I mean, I think a few of mine are, I already mentioned refi. I think I've been spending a lot of my kind of investing cycles on the Web3 side there recently. I just think any of these big, hairy, complex coordination problems, like we've been practicing an awful lot over the past X number of years, trying different models out, experimenting. And then I think we're gonna, over the next couple of years, see those applied to these kind of big, hairy problems. I wrote this piece called The Laboratory of Complex Problems, like really saying like everything that looks kind of dumb, I guess it is kind of like an addendum to the, the next big thing will start out looking like a toy. Like all these things that look like dumb experiments are all adding to this canon and this toolkit that people have to go solve really, really big problems. So I don't know, that I think to me, that is the most exciting thing. If you just zoom out and take a bigger view on a lot of this, I really think that Web3 is going to help solve a lot of very big problems and build really cool things that none of us can predict what those are going to be. So that's the thing that I'm always on the lookout for, is like on the micro level, what are the really kind of interesting tools and primitives that people are building, and then on the macro level, kind of how might those help solve big problems or do really cool things as humanity.
Awesome. And Chris, what about you?
You said, what am I most excited about Web3?
Yeah.
Yeah, look, I think it's, I think that the stakes are very high. I mean, it's the internet, I think that the internet's still in a very early phase. And the questions that, the questions that we're discussing are how will this incredibly important invention be architected over the next, whatever decades, 100 years? Where will the money and power flow? Who will control that? So it seems to me, just being, I think to me, it's an incredible opportunity that I can be part of that, and that we all can be part of that, and that we can have this kind of impact. I didn't frankly expect to have this kind of sized opportunity in my career. I lived through the first wave of the internet, and I feel fortunate to be now in this sort of third wave. And I think to me, what's so important is it's a really fascinating technology and products and all the other kind of good stuff, but there's also a mission, right? I think it's an important mission, and that's what really gets me fired up.
Awesome. Well, let's give a round of applause for Chris and Packy. Thank you guys so much. It's a pleasure to connect.
Thank you, Sep.